Hello guys, Tapele speaking here. So I've been requested to do the 714 method, which is basically not my strategy, but I do understand the market dynamics. So that is how people requested me. Credit to the guy who said this strategy, it is his brand, whatever. I've been contacted by the guy that I must stop teaching you all these things. So now I'm back based on you guys. You request too much. So I'm gonna share this thing for free and I'm gonna explain it in a market maker perceptions of how you are being deceived or how this market build the deceptive patterns in terms of the manipulation areas, based on the news, based on the technical manipulations. So the first one, I'm gonna analyze the pound index, which is the BXY. This is the pound index. Okay, so the pound index is the one that is going to be determining, it determines the direction of the GDP USD, of the GDP JPY, GDP NZD. So when you analyze the pound index, you've already analyzed 10 pairs. If you can analyze the dollar index, already you've analyzed 10 pairs. If you can analyze the AUD index, JPY index, NZD index, every pair it has their own index because that's the value of the currency. Every currency, by the way, okay, every currency it has a value. Every currency it has a value. Listen to me carefully. Every currency it has a value. The dollar, the pound, the euro, the JPY, the currency determines the value or the inflation of a currency, by the way. So, which is the BXY. Firstly, BXY opens at 2 o'clock p.m. But the GDP USD or any pair that is paired to GPP is gonna open at 12 o'clock, meaning that you're going to have two times where the market opens, the high and the low. So the market is gonna have how many signals? It's gonna have three signals or one signal or two signal. The first signal is when the market opens. Where does it go? It goes to the near support or to the near resistance. Then how will the market reverse? The market is going to reverse at this line, which is where, which is when the market opens at 2 o'clock. You can see 2 o'clock is at that point. There is 2 o'clock. There is 2 o'clock. There is 2 o'clock. Let me look for something that I can highlight on my screen. Okay, so I've analyzed all these markets for you guys so that you can understand. So there is the analysis, there is basically the market maker perceptions of how you guys know how to trade, because I can't say all these things without pointing which one is this one. Okay, so firstly we have this line, which is the line that break this move. Okay, so even at this point, I left this one. Okay, so one thing you have to know that a gap it is created by when the GDP USD was going down. Okay, a gap is created by when the GDP USD was going up. Okay, meaning that the market went up by maybe 4 candlestick, which is basically 10 hours going up, 10 hours going down, something like that. So at this point, we have the supply, which is the demand liquidity. At this point, we have the minor liquidity, which is going to be used to push the market down so that you guys who buys at this point, they're going to be wiped out. It's fine. Then what does the market can do? It can go down. Before you buy, you must sell first. Before you sell, you must buy first. Okay, something like that. Before you buy, you sell first. Before you sell, you buy first, something like that. So this one, it becomes an unmitigated or not taken liquidity, because that is your high of the day where the market is gonna go down, is gonna go up. So because the market is going to gap, something like that. Okay, that is your 2 o'clock at this point. Okay, then where's your 2 o'clock again at this point? That is your 2 o'clock at this point, your 2 o'clock at this point, your 2 o'clock at this point. So the market already highlighted a vertical line for you, which is the opening of the market. The market opens. What caused the gap? The market was going down during the day. Where did it go? near this resistance where you guys you want to do what you want to sell, then the market is gonna break this resistance. This market cannot break this resistance, but GDP-USD is gonna break this resistance. So meaning that GDP-USD is not going to be selling at this point, but it's going to be going against your stop loss, because you guys want to sell whenever you see resistance. Then the market is gonna go up. Where does it go up? Towards this liquidity at this point, this last candlestick, which is the last week, where to this point. So what happens is that during this, the day, which is the 16th of July, the market was doing what? Was trading for 10 hours, then it made the support. When this market opened, it went below this last, which is the 15th of July, it went down, then it went up. Something like that. This was on the CPI. The CPI bought the market to where? To your last low. The last low, which is basically the last high. I would say the last high since the market is buying, which is this point. Then look at what happened on the which is yesterday. On the 18th of July, the market bought, then the market made a gap, then it went down. On the 21st of July, which is basically Monday, what is going to happen is that I'm going to do something like this. I'm looking for where? I'm looking for half past, like I'm looking for 2 o'clock. This 2 o'clock. 2 o'clock, which is going to be at this point. That is when the market is going to open at this point. So what happened on Friday is that the market was going up. I care when you sell, when you see resistance, you just sell whenever you see resistance. You don't check the pound index, because the pound index is going to open if the market went up, it's gonna gap up. And now your second signal at 2 to 12 o'clock is gonna be when the pound gapped. Where the market is going to go? To the last low where the market opened. We opened at this point and we went up. Then at 2 o'clock, the market is going to gap automatically, hedging this price that went up. Then it's gonna do what? It's gonna come back down to the low at this point. So at this low, we have what? We have people who are forward, who just want to buy the market whenever they see a support. Then the market on Monday is gonna gap to this point, because Monday is a new week. It's gonna gap to this point. After gapping to this point, it's gonna be doing a range. This range is going to create a liquidity for you, because you too forward, you just want to see yourself in the market. It's gonna buy and it's gonna come down after a stop loss at this point, which is the buy side liquidity. The market is gonna go up. Where does it go up? To this point, which is unmitigated liquidity. This market that went down was not taken, because this close, these orders must be closed. How to close this order? To close this order, you must come below this order that bought the market, even this order. That is how you can close the order. You don't close the order by closing the order at this point. You close the order below. When you bought the market, you wanna sell the market to close the orders at this point. Meaning, then if you wanna buy the market, you're gonna put your orders below at this point. Meaning that putting the orders below, if you wanna buy, you push the price down. Those who already bought the market at this point, they are in loss. Then your order are going to be triggered below. Then the market is gonna go up, something like that. Then let me show you on the GDP-USD how this thing was affected on the GDP-USD. GDP-USD, the market is the same. This one opens at 2 o'clock. Then see what happens. See what happens right now. The market was busy going up during the day. I'm gonna show you your past 2, which is something that most of you guys you ignore, and you're gonna be questioning me useless things on my inbox that are very easy for you to see them. The market is the same. There's no any difference. That is your half past 2 at this point. When the market opens, it goes after a stop loss, it goes up. CPI, it goes up. So for Friday, on Friday, that was half past 2 at this point. That was half past 2 at this point. Okay, I'm just gonna explain these things for free for you. You must stop buying bullshit. There is 2 o'clock. The market was at this point. Okay, not 2 o'clock, by the way. There is 12 o'clock. The market opens at 12 o'clock. That is your first open. 12 o'clock. Here's our first open. Where's half past 2? 2 o'clock. Let's look for 2 o'clock. That is 2 o'clock. Your 2 o'clock is at this point. That is when the market was buying and the market went up. It went up. That is the gap that made this price to go up. Then at 2 o'clock, the market drops. It drops back to this opening. So since it went back to the opening, then let's look for what's going to happen on Monday. The same thing is going to happen. The market is going to go down after a stop loss. Then it's going to go up. Where's 2:30? I mean, why do I like to say 2:30? At 2 o'clock, where's 2 o'clock? Let me look for 2 o'clock. 2 o'clock is at this point. 2 o'clock, that is where the market is going to be. 2 o'clock. 2 o'clock, which is this point. That is 2 o'clock at this point. That is your second signal at this point. Is either a continuation or a reversal. The market is going to reverse at this point. So the market is going to be doing something like this. Let me delete this. It's going to do something like this. It's going to make a range at this point because you guys like to buy whenever you see something like this. Then it's going to come back to this point. Again, it's going to do a range to trigger your stop loss and it's going to buy back to that point. You now see how big the structure is on GDP USD compared to the pound index. So this is how the market can do. This is the strategy that you guys wanted me to explain. The strategy is 714 method, but on my side I don't say it is 714 method. It is session trading strategy that is based on the times. The first time when the market opens, it is going up for 10 hours. After 10 hours, the market is going to reverse because the pound index is opened. It's going to be doing what? It's going to synchronize the price of the GDP USD, meaning the market is going to go up or it's gonna go down. This is what happened on Friday. The market went down. Then there's the gap. That is the gap. Below, there's your stop loss. People who want to buy the market at this point. Then the market is going to drop towards these lows. Because I say, to close this order at this point, you must go below them. And if you want to buy, your orders are going to be at this point. Then the market must push this price down so that these orders at this point, they can be triggered in order for us to close this order at this point. Something like that. Nothing is difficult. What is difficult is that you understanding something that don't even know. You want to learn something that don't even know. How can you learn something without even understand how it moves? How? Why are you doing this, guys, every day? Why do you have to go for hard things? Why are you making things complicated? What things are easier for you? Like, this thing is just there for you to understand. It's not very difficult. It is free. The market goes up during the day. 2 o'clock, the market opens. Where was the market before 2 o'clock? The market was going towards the resistance. 2 o'clock, the market is going to reverse. Or it's going to continue going up. Then what else do you want? Even at this point, if I can look for 2 o'clock, you're going to see the same thing. Where's 2 o'clock? That is 2 o'clock. You guys, Mara, like, you guys, you disappoint me. Even at this point, let me show the reverse at this point. I'm looking for 2:30. I'm in 2 o'clock, by the way. Why do you like to say 2:30? That is 2 o'clock. That is 2 o'clock. 10 hours, the market was going down. Why did the market go down? Because of this resistance. Then 2 o'clock, the market continued going down and it reversed. Even at this point, 2 o'clock. Where's 2 o'clock? This the 2 o'clock candle. This one. By the way, fine, guys. Fine. It's fine. It's fine.